Morning from the UK. So we're going to be talking about setting up a company in China today, mainly around setting up a WOFE. We'll cover the background of company registration in China, some of the main considerations you need to take into account when setting up a company, and also some of the recent changes that have come in to try to ease the process of setting up a company in China and assess the impact of those changes. I'll begin with a couple of quick stories and case studies just to highlight the importance of getting everything prepared when you're going into the company registration process in China. The first one is with regards to fonts. And we have come across a case where articles of association have been rejected by the Chinese government department that was reviewing them because certain text used bold font instead of normal fonts, and so it was rejected. In a second case that we saw, and this was down in Shenzhen, the documents were rejected because of the type of pen that was used for signature of the documents. I believe it was a normal ballpoint as opposed to a gel-based ballpoint. And this is just to emphasize how particular you have to be when preparing documents and going through the process to register a company in China. There are two very small cases, but again, it's just to highlight that preparation is key when you're registering a company in China. And the slightest mistake or the slightest error that's not in compliance with the format that the Chinese government is looking for can cause delays and issues. But just to take it back a step as to why company registration in China has long been a lot more bureaucratic and approval driven than jurisdictions like the UK and the US, for example, where it's mostly online and simply takes a couple of days. Well, to put it simply, China is an approval-based system when it comes to company registration. I mean, it still ranks number 78 in the world, according to the World Bank, in terms of ease of doing business, and 127 in terms of starting a business. The Chinese government still maintain strong oversight over what kinds of businesses set up in China. And until recently, it operated on the basis of there were restricted industries for foreign companies, permitted industries, and encouraged industries. And therefore, they need a tight approval-based system to make sure that all foreign companies setting up in China fall into those permitted and encouraged categories rather than restricted categories. That being said, things are changing and changing for the better in China. Since 2015, Chinese government have been launching a series of policy initiatives to encourage a market-based economy and to ultimately encourage a level playing field between foreign and domestic companies in China. So one good example, which you may have heard of, is to move towards a positive list system when it comes to permitting foreign companies and foreign investment in China. And that basically states that anything that isn't restricted is permitted in China. So it moves away from this very strict and stringent list system of restricted, permitted, encouraged. Also, many of the processes are being streamlined, and we'll cover some of those changes a bit later on in this webinar and what impact they have. So the Chinese government is trying to encourage easier registration for foreign companies in China. And just quickly to review some of the main options to set up a business in China. And I won't cover each one of these considerations in too much detail, but just a quick overview. You have three different options. Firstly, a rep office, which gives you the ability to employ and hire staff in China and pay suppliers, so for example, for office rental. but it does not give you the ability to transact commercially, which is very restrictive for many businesses. So, for example, many universities use this type of entity, as they simply have student recruitment agencies, agents, or staff in China. They recruit the students, but most of the payments are all fulfilled overseas. They don't need to transact commercially in China. However, for most commercial enterprises, this kind of entity is very restrictive. The second on the far right there in the right-hand column is a joint venture, a JV. For this kind of entity, you enter into partnership with a local Chinese company, for example, and create a new entity called a joint venture in China. It's often in the case where a foreign investor is not permitted to be the wholly owned investor in that entity in China because of the industry that it is in. So, for example, pharmaceuticals or motor industry, automotive industry have been a couple of examples of this in the past. With the market-based reforms, the restricted industries are reducing. So, therefore, the need for joint ventures are also reducing as well. There are still some cases where a local partner might have such a strong sales network that is attractive to you, but you still want to consider this. But joint ventures are more risky in terms of the management and control and IP considerations. And generally, most foreign investors would like to still have 100% wholly owned subsidiary in China. And that is that central category there, wholly foreign owned enterprise, WFOE, commonly known as a WFOE. This gives you permission to conduct full commercial activity within a defined business scope and within a permitted industry, or an industry that's not restricted under the positive list system now, and therefore gives you a complete control over a subsidiary in China. So this is what we're going to focus on, as this is the most commonly used entity for foreign investors in China. And the registration process for setting up a WFOE is relatively predictable. There are several steps you need to go through, from approval with MOFCOM to application for business license with the Administration of Industry and Commerce, and then the subsequent steps to obtain the CHOPS and other permits to get you operational in China. The registration process and timeline does depend upon which location you're setting up in China. So it will vary slightly between Beijing and Shanghai and Shenzhen or other cities and provinces. And also the type of WFOE. So whether it's a trading WFOE, manufacturing WFOE, or just a consultancy WFOE. And typically the standard timelines you can predict quite easily from around 2 to 3 months maximum. And that, as I said, is a predictable part because you can get the application timelines from the relevant jurisdiction that you're setting up in. However, there are many other pre-investment considerations that hold the WFOE registration up. It's often not the government applications, but some of the key decision points. And I'm going to take you through half a dozen of these now, based upon our experience of setting up WFOEs for our clients. These are some of the areas where they get stuck and therefore the process is delayed. So firstly, around ownership structure. And this is mainly to do with which holding company you use. So which is the main holding company, which will be the investor into the WFOE in China. Now, the obvious option would be your main parent company in your home jurisdiction. So if you're a British company, you use that company to be the holding company for the WFOE in China. Ditto US, or the Netherlands, or France, or Australia, or wherever your home jurisdiction is. Sometimes, and quite commonly in the past, companies have also used Hong Kong or Singapore holding companies as the main vehicle to be for the WFOE in China. mainly due to international tax considerations and also withholding tax. So for those two jurisdictions long had a taxation treaty with China, which reduces withholding tax for the repatriation of profits from standard 10% to 5%. With the qualification criteria for those becoming a bit more stringent. And also many other jurisdictions, such as the UK, have also got similar taxation treaties now in place, where you can take advantage of preferential withholding tax rates. So be clear on which parent company, which company you want to use for your holding company, as also the document requirements for a holding company from the UK, for example, will be different for those from the US or Hong Kong or other jurisdictions. Secondly is location in China. So where will you set your WFOE up in China? As I mentioned before, each jurisdiction does have slight variances in their application procedure and process. Some of the considerations to take into account when you're looking at where to set up in China might be where your client or supplier base is. So if there's a cluster around Shanghai, then that would be a good place. In other cases where we've helped companies, and in one case a football club, who have had a direct relationship with the local government, in this case in East China, and therefore they have set up there because they have that strong relationship and they're confident that they'll be able to get the application through without any problems. And also often local governments will give incentives for direct companies, also whole industries where they want to encourage investment on their patch. And taking an example, in one case, a large British manufacturer who was encouraged to invest in an industry park in East China, they got their rent for their warehouse waived for half a year and also some tax rebates. So understanding location, both in terms of from a commercial perspective, also from a government perspective, is key. Thirdly, you need to decide on who will be the legal representative for the WFOE in China. This is just one person, and they will be the person ultimately responsible for signing off contracts, signing off applications to government, person who will have ultimate control over things like bank account keys or company stamps in China, chops, which are commonly used. This person also has ultimate liability over the company in China. So in case of debt or other liabilities arising, it's the legal representative who holds those liabilities. It can be a person overseas. So for larger companies, maybe that's the FD, the finance director or COO or finance manager, someone in an operational role. For smaller companies, it's often the owner, the CEO. Or it can be someone in China as well. However, as I said, because this role is so important and has so much control over the company, that needs to be someone very trusted. If it is someone overseas, then you'll either need to delegate a designated signatory, designated person to take care of many of those control points in China, so signing contracts or taking care of bank account transactions. Or the alternative is to have documents that need to be signed, couriered over to your home country. But from the outset, you need to be very clear who will be the legal representative of the company. You'll need to be very clear on what your business type and scope is. So as opposed to the UK or the US or many other Western jurisdictions where you can set up a company and operate in any scope, providing obviously it's permitted under the law. In China, you have to define what your business type and scope is based upon your sector and your intended activity. So some examples of business types are consulting, marketing, trading and commerce, manufacturing. Then the scope underneath that will be a long list of activities that you intend to operate under in China. And these are quite specific. And these are very important because you can only transact and issue invoices in China under the scopes that are listed on your business license. The wording of these different business scopes varies from jurisdiction to jurisdiction in China. So it's worth getting local advice and local expertise on what you should include. But it's important as a general rule from the outset to try and put together a broader scope as possible, because to change it at a later date also requires a further application and unnecessary time and cost. You'll need to decide on your Chinese company name. And generally this is in the format of the name you choose, usually 2 or 3 Chinese characters, plus the location, plus the industry, and then finally company type. So LNP China, or WFOE in China, it's called LNP brackets Beijing Trade and Commerce Company Limited. This is just an official name. And many companies we've worked with tend to get caught up on this issue when actually it's of limited importance, because it's just used for official purposes such as contracts or on your official invoices. You can still trade under your trading name. So in our case, LNP China, that's fine. This is just an official name to register with the Chinese government for operational purposes. So you can have a Chinese name, a trading name, which is different to this, which is more suitable, because also this name will need to be available, and you'll need to apply for it at the pre-application stage of setting up a WFOE, and your preference might not always be available. Next, registered capital. This is again a unique factor with regards to setting up a business in China. And registered capital, in essence, is the limitation of liability of the WFOE. Often clients will look at it. If you're in a procurement process or you're entering a supplier system of a Chinese company, often ask for your registered capital amount. So it's important to understand maybe some requirements from your potential clients of registered capital in China. However, this is less important than it used to be. So in 2014, there were reforms that relaxed the rules around registered capital requirements. Often there are much lower registered capital requirements now, and with longer injection periods. So for a service-based WFOE, we recommend between 100 and 200,000 RMB, which can be injected over a period of 10 years. And if you're any business that has a clear business plan in China, then that will easily cover some of the main operating costs quite quickly. It's not just a burden, registered capital. It can also be used as a good vehicle to get money into the company tax-free. So all registered capital, you pay it into your foreign capital account, then convert it to a renminbi account, and all of that is exempt from tax. So it can be an advantageous way to get money into your business in China. Finally, this is what we find holds a lot of companies up in China. And it's around getting the right documents prepared in the right format, and notarized and legalized by the correct authorities to be recognized and accepted by the Chinese government department who is processing them. So, for example, in the UK, some key documents are the Certificate of Incorporation, Articles of Association, recent annual tax return, letter of good credit from your bank, a letter from shareholders to give the permission to set up this entity and to give permission to the legal rep in China. And it's a 2 or 3 step notarization process from a lawyer, Chinese consulate or embassy in the UK, and also the Foreign Office. But each home country jurisdiction will have slight variances, obviously, of the documents that they produce. And each local jurisdiction in China also, requires documents from different countries to be in certain formats. So it's important to understand and to match those up. And this is where local expertise and to get very clear templates from an agent in China is absolutely key, because the slightest error, as I stated through those stories at the start, can result in your application being rejected, which causes very unnecessary delays. So those are some of the key considerations. So what are some of the recent changes, and are they beneficial? So the first change is around the format of the business license. Up until last year, it used to be a 3-in-1 business license, which included those first 3 on this list. So a business license, a tax certificate, and an organizational code certificate. It has now changed to a 5-in-1 business license, which also includes social security certificate and national statistics certificate. So this does it mean that you don't need to go to these extra 2 departments to get these 2 different certificates like you used to. You just get all of these in one certificate from one government department through one application. However, in practice, it only saves about a week in terms of the application timeline. So the impact of this is relatively minor, but beneficial nonetheless. A more significant change is in the application sequence. So more recently, I think it was first trialed in Shanghai and slowly being rolled out in other jurisdictions as well. It's a parallel application and review process. So before, you needed to get approval from MOFCOM first for the WFI, and once you got that certificate of approval, you could go to the Administration for Industry and Commerce to get your business license. You can get your business license first whilst that review is ongoing, and therefore it allows you to save up to 2 or 3 weeks potentially whilst you're getting your WFI set up and operational. The approval process can continue in the background, if you like. So this is a bit more significant. The third key change is around online registrations, which was announced a few months ago. It's due to launch later this year. This is the big unknown as to what this will look like at this current stage. We do know that it's only agents who can still process this, so approved agents. And we still know that there will be physical paper applications that are still required. So it might not have a huge impact. However, it's a positive direction the Chinese government are taking to try and make it a bit easier. So everything's not so paper-based, and also just to bring WFI applications kind of up to date with the modern age, if you like. And just a final word on controlling your WFI in China. So these key elements, this is probably another webinar in itself, but around CHOPS and invoices, business license, bank account keys, and signature authority. These are real key control points around your WFI in China, and it's essential from the outset to make sure that the right person is in control of them, and that should be the person who is a trusted person within the business. And don't just hand over all of these elements to one person in China, as you will leave yourself potentially exposed. So that wraps it up. And like with all our webinars, we finish with 5 tips for success in this area. So I'd say understand why you need a WFI before you start registration. There are other options available. Make key decisions early on and don't get caught up on the minor points, for example, the name. Get clear document templates for applications, as the margin for error can cause difficulties. Do contingency plan in case of some inevitable delays, and maintain those key control points that I just mentioned. And if you want more information, we have a guide on setting up a WFI in China, And if you have specific questions, then please do follow up. My email address is at the bottom there. Thank you very much.